Another rebalancing, another sell-off. Let's look at the prospects for the Philippine markets, and they may not look too good. Let's discuss. My name is Den Slim, and welcome to another episode of Monday Market Outlook. The PSEi down another week, plunging straight to the 6150 support zone after another massive sell-off brought about by the conclusion of the FTSE rebalancing last Friday. So far, these rebalancing events have been painful for the markets as we continue to see some of the biggest outflows for Philippine stocks in the past 2 years. Looking at the table, we continue to see sell-offs on almost the same names for quite some weeks already. Property stocks, conglomerates, even the strongest stocks, ICT and Meralco, was not immune to the sell-off this time around. Meanwhile, we only had 9 stocks with net foreign buying, ASEN and CNPF leading the way. In terms of the index movers last Friday, ICT pulling the index down 34 points out of the 186-point PSEi drop. Again, familiar names on the top index movers, with also only a handful of gainers, not even reaching 10 stocks. Let's look at the PSEi charts. The market closed right smack into the 6150 zone. We were hoping last week that this 6,375 zone would hold, but the index finally succumbed to selling pressure. I guess it was too much to hope that the FTSE rebalancing would have minimal impact on the market. Now, looking forward to this Monday's trading session, the PSEi is most likely to open at around 6,235. If we look at the 5-minute chart, we can see the massive gap down during the last 5 minutes of trading. So we may open the markets this Monday closer to the 6,230 level. From here, can the markets continue to hang on to dear life amidst the heavy foreign selling? Now, what could drive the markets down further this week? China confrontation, maybe the further depreciation of the peso to 59. But in any case, the PSEi undeniably trending downwards. But if we zoom out, we are actually nearing a major support zone here at 5,975 or even 5,730. You can see here that the PSEi has been moving along this box formation here, and 5,950 may not actually be far off. The major demand zones here are areas where we see either support or resistance levels on different time frames. If we look at the weekly charts, we can see that this level here is where most of the weekly price action ends. Same here, same here. This is also a complete weekly candle. But if we look at the monthly candle, remember, we have not finished this month yet. So we cannot say that this candle will end here. But for the other support zones here, the 5,970, 5,950, and the 5,750 zones are where the monthlies, the weeklies, and the dailies do tend to converge. But for this week, we may get a bounce, maybe a technical bounce, but the very strong downwards momentum here will continue to haunt the market until a catalyst could probably pull the markets up. Or maybe that catalyst could push the markets down. Now, let's look at some other stocks hanging into dear life. AC, look at that, hanging into dear life in this support zone. 500, maybe its next target, or maybe even 467. GT Cap, also back into this support zone. 536, maybe 509. Ali also breaking down of the 2680. It's back into the 2625, but maybe 2415 would be its next destination. SMPH 2570, it looks like it's headed towards 25. Jollibee breaking down from 217 support. 210, 204 are your most likely levels. We've been here before. Let's see what happens. AP also 3440. Has it bounced off from the 34 support zone? We'll see. But looking at the calendar for next week, we will have the BSP interest rate decision on Thursday. The consensus is for the BSP to keep rates steady as the peso continues to be pressured in the forex markets. GDP growth rate for the US will also be out, as well as the Fed's favorite inflation gauge, the core PCE or the super core price index on Friday. So we could see a lot of movement in the last trading day of this week. Meanwhile, let's look at the S&P 500 charts. The index tapping into another all-time high, 5,516, before experiencing weakness last Thursday, though it was a positive week for the S&P 500. The index finally showing signs of weakness in the last days as the market is again concentrated on only a few stocks. Now, looking at the moving averages here, the market is due for a consolidation or maybe even a mean reversion to the 20-day EMA, which also sits along the 5,400 support zone. Remember that the market is again being carried by only a handful of stocks, most notably Nvidia. And after Jensen Huang, Nvidia CEO, offloading over 94 million worth of Nvidia shares, this may have contributed to the 9.7% decline for Nvidia in the last 2 days, as investors are starting to think that the bubble may have burst. And this is the thing with market bubbles, right? When you see a lot of headlines in the news mentioning the word bubble, the market seems to go up some more, until such time that the news headline stops and the correction actually happens when you least expect it. And you can't blame the news outlets, because if you look at market breadth here, we are at an all-time high in terms of the number of stocks experiencing 52-week lows compared to the number of stocks experiencing 52-week highs. So what is keeping the markets up when a lot of stocks are actually down? And as the news have been comparing the dot-com bubble with the AI bubble, let's look at the current markets in terms of valuation. So far, we are actually not there yet in terms of the outrageous levels we saw during the dot-com bubble. Remember, this time in 1998, you simply mentioned World Wide Web and your stock instantly goes up. Today, same thing. You mention AI and your stock goes up. But so far, we may still have some room for upside. Check out this chart showing the percentage of NASDAQ peaks per month. And while June is normally a quiet month, we see here that the NASDAQ tends to have a 1-month peak 24% of the time and a 3-month peak 12% of the time, making July the peakiest month of the year. And what tends to happen after July, we enter into the traditionally weak months of August, September, and October. And probably you can add December into the list, because as we follow the soft landing chart scenario, look at how the current S&P 500 tracks closely with the 1960s and the 1990s market, where we usually have a correction during this time of the year if we do continue to track this trend. And as we enter July, remember that after July, we will have the ghost month again. Ghost month this year will be on August 4 to September 2. And if we look back at the S&P 500, how much further are we going to peak in July before the ghost month in August sets in? If we draw a Fibonacci chart here, we can see that we have actually reached the 1.68 Fibonacci level. Could we be headed to 5,643 before the market experiences a major correction? Now, looking back at the local markets, here's the PSEi and here's the ghost month. What happens in between? Do we get a consolidation, a rally, and then do we see a sell-off back to 5,975? Because looking back at the past 2 years, look at what happened during the ghost month. We do see a rally and then a major correction. What happened the previous year? We also have the rally and a major correction during the ghost month. So we've been warning everyone to be a bit cautious in the markets. Don't be too aggressive. And hopefully you were able to keep the powder dry in the eventuality that the markets may actually go down to these levels, where I think the buyers may eventually bring life back to the market. So that's it for this week. Please like this video if you found the information useful. Please subscribe to the channel for more updates. And again, good luck on your trades. Please manage your risk accordingly. And I'll see you again next week. Bye-bye.